Welcome to Tuesday morning's critical episode of Crypto Macro Insights. I'm Maya, and it's Tuesday, September 9th, 2025, 7 a.m. Eastern. Tom, exactly 24 hours after our Emergency Monday episode documenting peak contrarian extremes, we're witnessing the acceleration phase of the greatest liquidity deployment in modern Fed history. Our real-time internet sentiment monitoring continues showing extreme bearishness, retail voices calling for red September crashes, while fresh Fed data confirms Bitcoin's extraordinary 42.7% six-month performance from $78,544 to $112,095. Meanwhile, the reverse repo facility hit another new low at $19.42 billion, representing an unprecedented 85% collapse since March. Tom, with the Fed meeting just 8 days away and our updated macro analysis confirming all 10 indicators pointing bullish, are we about to witness the final capitulation flip that launches Bitcoin toward our 125,000 plus targets?
Maya, yesterday's emergency analysis has been completely validated by today's fresh Fed data pulse. Bitcoin's actual 6-month performance is even more extraordinary than we initially calculated. We're looking at a 42.7% gain from $78,544 to $112,095, representing one of the strongest institutional accumulation patterns in crypto history. But here's what's remarkable. This massive performance is occurring during peak internet pessimism. While retail voices online continue predicting crashes to $90,000 and rotating into gold, institutions have quietly absorbed every dip below $111,000. The reverse repo collapse to $19.42 billion means we've now seen $115.63 billion deployed since March. That's 85.6% facility liquidation in just 6 months. Maya, when you combine Bitcoin's proven 42.7% outperformance with 85.6% reverse repo liquidation and retail sentiment at maximum bearish extremes, you're witnessing the setup for the most explosive institutional FOMO in crypto history.
The updated Fed analysis shows all 10 major indicators pointing bullish. VIX collapsed 45.8% to 15.11, dollar index down 4.7%, 5-year inflation expectations up 7.5%, high-yield spreads compressed 10.1%, and M2 money supply expanded by $458.5 billion. Tom, how do you interpret this unanimous macro alignment supporting Bitcoin's 42.7% performance?
Maya, this is the most extraordinary macro convergence I've ever documented. When all 10 indicators point in the same direction, particularly with this magnitude of change, you're witnessing historic monetary conditions. The VIX collapse to 15.11 signals maximum institutional risk appetite. Dollar weakness at minus 4.7% creates demand for alternative stores of value. Rising inflation expectations make nominal assets attractive. The 85.6% reverse repo liquidation represents the largest peacetime liquidity injection in Fed history. And Bitcoin's 42.7% outperformance during this period proves institutional adoption is accelerating, not slowing. Maya, retail internet voices calling for crashes while every single macro indicator screams bullish represents the most extreme contrarian setup in modern market history. This isn't just about Bitcoin benefiting from one or two favorable conditions. This is about Bitcoin being the primary beneficiary of the most accommodative monetary environment ever created.
The disconnect between Bitcoin's proven 42.7% 6-month performance and the continued internet pessimism is remarkable. We're seeing discussions about red September, mass rotation to gold, predictions of Bitcoin crashes to $90,000, all while the data shows one of the strongest accumulation patterns in crypto history. How do you explain this psychology?
Maya, this represents peak late-cycle retail thinking. Retail always gravitates towards safety exactly when the biggest opportunities emerge. They see gold at $2,700 and think it's the smart money move, ignoring that gold is a $15 trillion market that moves incrementally while Bitcoin is a $2 trillion market that moves exponentially. The central banks buy gold, not Bitcoin narrative misses the entire point. We're not trading central bank flows. We're trading the forced deployment of $115.63 billion in reverse repo liquidity by institutions that can't earn 4.3% when they know 50-plus basis point cuts are coming. MicroStrategy, BlackRock ETFs, corporate treasuries. These flows matter more for Bitcoin than central bank gold purchases. Retail obsessing over gold while Bitcoin demonstrates 42.7% six-month outperformance ahead of the biggest liquidity injection in history is the ultimate contrarian indicator. When internet voices are calling for $90,000 crashes while institutions absorb every share below $111,000, you know the bottom is in and the explosion is imminent.
With the FOMC meeting just 8 days away and Friday's catastrophic NFP print still reverberating through markets, what's your updated probability assessment for Fed action?
Maya, Friday's 22,000 NFP versus 160,000 expected created a paradigm shift. The Fed can no longer maintain gradualist rhetoric when employment is collapsing this dramatically. My updated probabilities, 50 basis points is now 90% likely. It's the minimum credible response to avoid looking completely asleep at the wheel. 75 basis points is 10% likely if we get additional labor market deterioration this week. But here's the crucial insight. 50 basis points with emergency dovish guidance is actually more bullish for Bitcoin than 75 basis points because it maintains the narrative of measured response while delivering maximum accommodation without triggering genuine recession panic. Either way, Bitcoin benefits massively from Fed cuts, but the 50 basis point scenario with forward guidance promising more cuts gives us the Goldilocks environment. Maximum accommodation without maximum fear. This validates our liquidity thesis while maintaining the risk-on environment that's driven Bitcoin's 42.7% six-month outperformance.
Yesterday, you maintained the 7% allocation with the final 1% add prepared for the 115,000 break. Given this morning's confirmed data and continued internet pessimism, are you adjusting the framework?
Maya, I'm maintaining the current 7% allocation, 5% core plus 2% tactical, with stops at 108,000 for thesis and validation. But today's data confirmation makes me even more confident about the final 1% add at the 115,000 break. The combination of Bitcoin's proven 42.7% outperformance, 85.6% reverse repo liquidation, unanimous bullish macro indicators, and peak internet pessimism creates the most asymmetric risk-reward setup I've ever documented. The 115,000 break will trigger the final 1% add for 8% maximum allocation because that level represents the point where technical breakout meets fundamental acceleration. Maya, when Bitcoin breaks 115,000, which I expect within 48 to 72 hours, it confirms that institutional FOMO is overwhelming retail capitulation. This will likely trigger violent moves toward our 125,000 to 135,000 targets as the 85.6% reverse repo liquidation finds its final deployment destination. Risk management remains paramount with stops at 108,000, but the opportunity to capture the most explosive phase of crypto's institutional adoption is equally important.
Tom, yesterday you mentioned that September 8, 2025 would be remembered as a historic inflection point. With today's data confirmation showing Bitcoin's 42.7% six-month outperformance during peak pessimism, how do you view the significance of this moment?
Maya, today's data confirmation elevates yesterday's analysis from prediction to documentation of historic reality. September 8th to 9th, 2025 will be remembered as the 48-hour period when the most extreme monetary accommodation in modern history converged with the most extreme retail pessimism in crypto history, all while Bitcoin demonstrated one of the strongest institutional accumulation patterns ever recorded. We now have mathematical proof. 42.7% Bitcoin outperformance, 85.6% reverse repo liquidation, unanimous bullish macro indicators, and peak internet bearishness. This isn't speculation anymore. This is documented evidence of the greatest wealth transfer opportunity in modern market history. When historians analyze crypto's transition from speculative asset to institutional treasury reserve, they'll point to September 8th to 9th, 2025 as the moment when everything changed. The next 7 to 10 days will be remembered as the period when the biggest liquidity injection in Fed history finally overwhelmed the most stubborn retail pessimism in market history. Maya, we're not just trading this opportunity, we're documenting it for financial history.
Extraordinary confirmation, Tom. To summarize this historic Tuesday morning for our listeners, fresh Fed data validates yesterday's emergency analysis. Bitcoin's actual 6-month performance is 42.7% from $78,544 to $112,095, representing one of the strongest institutional accumulation patterns in crypto history. Reverse repos hit new lows at $19.42 billion, representing 85.6% facility liquidation since March, the largest peacetime liquidity deployment in Fed history. All 10 macro indicators point unanimously bullish. VIX collapsed 45.8%, dollar down 4.7%, inflation expectations rising, money supply expanding. Internet sentiment remains at peak bearish extremes with red September predictions and gold rotation while institutions absorb every Bitcoin dip below $111,000. Fed meeting 8 days away with 90% probability of 50 basis point emergency cuts after Friday's NFP catastrophe. Current position framework, 7% allocation, 5% core plus 2% tactical, with final 1% add prepared for 115,000 break targeting 125,000 to 135,000. Key insight: the most extreme retail pessimism in crypto history is coinciding with the most accommodative monetary environment ever created, creating the ultimate generational opportunity. September 8th to 9th, 2025, the 48 hours we documented peak contrarian extremes with mathematical precision ahead of crypto's most explosive institutional adoption phase. The math is overwhelming, the setup is perfect, the data is confirmed, and the opportunity is generational. Position accordingly, stay disciplined, and prepare for what may be the most violent sentiment flip in modern market history.